YouTube, happy Tuesday. I hope you've had a great start to your week. If you're new here, my name is Patrick Harris. I'm a local real estate expert down here in South Texas. This channel is a resource to help buyers, sellers, whether you're a first-time buyer or an experienced buyer, learn a little bit more about what's going on in the market, how the market's looking currently, property tours, interviews, different types of resources that can help you in your home journey. Today, we're going to be doing something a little different, but kind of the same. We're actually be going to downtown McAllen to sit down with a local lender and go over some of the common questions that buyers have when they're entering the market. So I think you guys are going to get a lot out of this one, and some of the questions you might have about the home buying process, we might answer today. Also, if there's a question you have and we don't answer it today, drop it down in the comments down below. This way we can answer it. Or if you feel more comfortable reaching out to us directly, my contact information is down here in the description, along with the lender's Benny's. All of his contact information will be down there as well. Get connected with us and we can answer those questions you might have. And of course, if you're looking to get your home search started, there's a search tool down below that you can search for every home available in the Rio Grande Valley. Also down in the description below, if you're a homeowner, there's a tool that'll allow you to get an idea of the value of your home. A lot of us have gained equity. I heard a stat the other day that in 2021, the average homeowner gave over $44,000 in equity in their home. So take a look down below, check out the tools, see what your home's valued at. It might be worth a lot more than you think. All right, YouTube, let's head downtown, meet with Benny, and get some of our lending questions answered. I'll see you guys there. Happy Tuesday, YouTube. I'm down here at Gateway Mortgage, sitting alongside with Benny, who's actually a loan officer with Gateway. Today, we're going to go over some common questions you might have for your lender, even some questions you might be even scared to ask. Hopefully, Benny can give us some insight on that. So next time you're sitting in your loan officer's office or you're on the phone with your lender, you won't feel scared to ask them and you can get that information you need. All right, Benny, tell us a little about yourself. How long have you been at Gateway? How long have you been a loan officer? How did you get started in the business?
Yeah, so actually I started in the insurance industry and I made my way over to the real estate industry, the mortgage industry. I've been with Gateway about 4 or 5 months. I've been in LO for about a year.
Nice.
I'm a loan officer. I'm actually working as a part of a team. So it was myself and 3 other loan officers. And we have an awesome team here. Usually if one of us doesn't have the answer to something, the other one will. Nice. So it's an awesome structure that we have.
Yeah, getting that team dynamic really makes a difference.
For sure, big time.
Definitely. Like I said, I'll leave his direct contact information down in the description. You guys can reach out directly to him. Or of course, if you want to connect with me, I can get you connected with Benny. But that way, we're here to help you make the best decision for your family. Okay, so a common question, Benny, that I get from a lot of my clients, one of the first questions they ask me is, how much of a home can I qualify for?
Yeah, so that's it. Actually, it should be the first question, and it's an extremely broad question. Usually when somebody asks me that, it's a first-time home buyer, and the response that I always say is, let's start with your application. We have an online application. It asks you for very basic personal information. It'll give you a good overview, because at the end of the day, it's 3 big things that we're trying to piece together. It's your income, your qualified income, your assets, which is cash in the bank, retirement funds, pension, social security, and of course your credit. So we pull your credit, from your credit we pull up your liabilities, and so it's really those 3 things that we take into account to take into account how much home you can qualify for. And the easiest way to at least get started and the most efficient way is definitely to head over to our website and fill out that application. And typically what I will do is just co-pilot that application with the borrower. Sometimes there's a couple questions in there that they're not really too sure how to go about. So here, like I mentioned, we have a team structure and one of us is always available.
All right, so second question, in real estate, a lot of terms are thrown around. You hear all types of different things, and especially for a new buyer, it can be definitely confusing. And I think on the lending side, there's 2 terms that get thrown around a lot, but it's not always clear what both of them mean. and it's pre-qualified versus pre-approved. So let me ask you this, what is the difference between the two? And just way, as a buyer, they understand which one's better and the benefits of each one.
That's a great question, and actually myself and Matt, we've had an entire bunch of learns and seminars just on that one question alone. So I'll try not to drag out too much. But basically the biggest difference between being pre-qualified and being pre-approved is to pre-qualify someone, typically I will just have ran your credit. I'll ask you some basic questions regarding your gross income, things like that. I'll start piecing things together and I can give you a general idea, hey, you'll be good to go. Once you're pre-approved, I verified everything with documents, which is with income documents such as pay stubs, W-2s, 1099s if you're self-employed, your personal and business tax returns, things of that nature. I have verified everything with documents, and I can say, hey, you're pre-approved. So that way, by the time I send someone over to yourself and I let you know, hey, this person is pre-approved, you know that we've done our homework and that everything has been verified with documents.
Gosh, that makes total sense. So basically, ideally, you want to be pre-approved versus just pre-qualified.
Yeah, and the benefit of being pre-qualified is somebody that might be on the fence. It's very common for a borrower to think that they can't afford a home, so at least like that, it's a little bit easier for them to get their foot in the door. And from there, it's like, hey, well, based on what you're telling me, like, it looks pretty solid. Like, why don't you bring me all your documents and I can actually confirm this. So obviously, once somebody is pre-approved, the only difference is that I have verified everything with documentation.
You've done all your homework.
Yes, exactly.
And that makes sense because, I mean, pre-qualified, you know, like he's saying, a lot of people, they think, oh, there's no way I can afford a home. But to get pre-qualified, it just takes a few seconds and you can figure out right off the bat, oh wow, I didn't know I could afford a house like this. So that's a good way, like you said, get your foot in the door, kind of see, okay, I definitely can afford a house. Let's do the next step. Let's get pre-approved to make everything go a little bit easier.
I like that you said that because it's true. I can pre-qualify somebody in a few minutes.
Awesome.
Just with some general information. And by the time I pre-approve someone, if I get someone that's very organized, I can also do it pretty quickly. But typically, most people won't have all that documentation on hand, and typically they'll give that to me in a day or two.
That makes sense, which actually leads me to my next question. What documents should a prospective borrower expect to bring with them when they meet with you to get pre-qualified?
Yeah, so typically, if you have an employer, it would be most recent pay stubs, typically at least a month worth of pay stubs. So most people are bi-weekly. I would say 2 pay stubs, you're good to go. W-2s, your 2 most recent W-2s. So right now we're in 2022, so 2020, 2021 W-2s. Bank statements, of course, and then we get into other detailed stuff, such as if you have child support,
depending on
if you have,
situation.
anything like that.
That makes sense. Okay, so that's good to know when you're getting ready to sit down with your loan officer. Another question I get a lot from my clients when they're coming to the loan process, they ask me like, is there anything I should avoid doing, or what should I avoid doing it during the pre-qualification process? Because it can take a little while to get pre-qualified, but then when you're under contract for a home, and we're talking about maybe 30, 45 days, are there certain things a client should be thinking about during that process?
Yeah, and I would say from the get-go, hey, like, I'm going to enter the market soon, I would like to start purchasing. Once that thought enters your mind, you better start locking in a couple of things. So first and foremost is don't open any new lines of credit, don't go purchase a car, which is probably the most common that I see. Another misconception a lot of people think is if they co-sign for somebody that it won't come out on their credit report. I've had that happen a handful of times. So when it comes on the credit report, I'm like, hey, this liability, you're on. So
right.
Not only does it affect your credit score directly once it's pulled, it's also another liability that's gonna count against your DTI, your debt to income ratio.
That's good to know. So, start thinking about these things as you begin your home searching journey, because, you don't want to get under contract for a home or, get a pre-approval from a lender, and then 2 weeks before you're supposed to close, if you go buy a car, you do some other type of credit product, you lose your chance of getting a home.
Other good things, not to get into too much detail, but for sure to take into account, is keep your credit card usage to a minimum, preferably under 30%, just to take care of your credit, and make all your payments on time. and don't change jobs. Keep your job history is so incredibly important for your past 2 years. So those are just a couple, they might seem like common sense things, but it's something to keep in mind. Of course, life does happen, but
right.
These are just things that once you start getting into the process, you really want to have your ducks in a row.
That makes total sense. So, and again, a good loan officer like Benny here will tell you from the start, and they'll be educating you and coaching you through the process. So that way, you know what you should and shouldn't be doing.
Just to add to that point, it's very common for somebody maybe to not be there yet, and so I'll kind of help them put together a plan. Hey, this is how much you gotta save up, so and so. Maybe these accounts you want to pay them off, what have you, right? And typically, what I always tell the buyers, and it sounds funny, I'm like, hey, for the next X amount of weeks or X amount of months, I was like, I'm your financial advisor. You want to buy something? You're thinking about doing something? Just call me. Just call me.
Definitely.
Just call me so I can tell you no.
And that's huge. Not every client's thinking about that as they're going through the process. And our goal is to get you that dream home you're thinking about, to get you the foot in the door. And so, whether you take these things to heart, it's up to you. But at the end of the day, we want to make sure you guys achieve what you're looking for. So
yeah, we want to do everything up front. That way, by the time we're actually looking for a home, by the time we're under contract, we want the closing to just be as smooth as possible.
100%.
Yeah, of course.
Okay, so a question I get actually from a lot of my clients is, hey, I just started a brand new job. Does that mean I can't qualify for a mortgage?
That's an excellent question, and the quick answer to that is yes, you can still apply for a mortgage. So, as I mentioned earlier, we do require 2 years worth of employment history. So for college grads, that time that they were in college actually counts as their employment history. So I'll give you an example. We have a lot of registered nurses, doctors, what have you. If they just graduated college, when they're going into their field, their profession, we can actually use their job contract, an executed job contract, and that'll count as their income. As well, here in South Texas, we have tons of pipeliners, oil field workers.
Yep.
So it's very common for them to kind of have a couple of different jobs. It's very common. I've seen quite a few within a 2-year span. And for them, it's perfectly fine because it's in the same industry. The thing that we really want to see, we don't want to see big gaps in employment.
Okay, so when I'm working with some of my older clients, sometimes I get questions like, can I use my retirement income, my Social Security, my disability income streams to help qualify for a mortgage? Because a lot of times they ask me, like, I don't think I can qualify because I'm only receiving these sorts of income. So if someone asks you that, what do you think is the best answer to that?
Yes, so as I mentioned earlier, a lot of times people don't think that they can qualify for a home, and one of the big reasons a lot of the times is for this exact reason that somebody might think that they can. And as a matter of fact, whether it's a pension from retirement, Social Security, or disability, it can be used in income, and as a matter of fact, depending on the loan program, that income can even be grossed up anywhere from 15 to 25%. So it's a strong yes, it can.
Oh, nice, that's awesome. So one thing you might be thinking, and if you're in that category, you might actually qualify for more than you think. So the best thing to do is reach out with your local loan officer, get connected with Benny, find out, hey, this is my income stream, can I qualify for a home? And more than likely, they might tell you yes. So a common question I get from my clients is, I know I have to do an earnest money deposit and an option fee, at least here in Texas, but how do I figure out what my closing costs are? What are closing costs? Why do I have to pay closing costs?
Yeah, that's a great question. So actually, a lot of borrowers, the way we do it is when somebody's approved for a certain amount, we'll actually review a fee sheet with them. So the fee sheet will have their down payment amount, if there's a down payment, it'll have their closing costs, and it'll have their prepaids. And so we go line by line so that they can actually see all the fees associated. So your closing costs, of course, there's fees associated with the lender, the appraisal, title, survey. So these are fees that many times, especially for first-time home buyers, that they're not aware of. So the easiest way to think of your closing costs, it's all the costs associated with getting your loan from under contract to the closing table.
That makes total sense. It's a way you can see where every dollar of the cost is going, where it's going. So a very common question I get from clients or people just starting to get to the market is, hey, my credit's not in the best shape. It's not where I really want it to be. Can I even qualify for a home?
Yeah, so credit is typically the primary concern when speaking to a borrower or client for the first time or a prospect for the first time. The answer to that is, well, we work with credit as low as 580.
Wow.
As low as 580. Of course, the lower your credit score, a lot of interest rates are directly based on credit. There are certain programs that you'll be limited to using. For example, down payment assistance, it has a minimum credit score that you have to meet. So what I will typically go over with the borrower that is not really sure about their credit, I will either ask them to just do the application. Many times it has happened where the credit is actually in better shape than they think. And from there we can move forward. And if the credit is too low, I'll give them some tips on what they can do for credit, as far as like some general rules of thumb, as far as credit card usage and things of that nature, not holding high balances.
That makes sense. Another question that comes to mind is, if a borrower's credit score doesn't qualify for them for a loan, I know they can meet with you, review what they can do to improve it. How long does that process typically take from when they start the process to improving their credit to when they can qualify to buy a home?
So when we pull a borrower's credit, it'll actually it's called Wayfinder. It's through the credit company that we use to pull credit. And it'll actually give them an option there. It'll show us, and we share this information with the client. So for example, if their FICO score is, let's say, 550, if there are certain accounts that are there, because of course when we pull credit, their accounts are there. So let's say their credit score is 550. If there's potential there, it'll actually show me their potential to improve their credit, whether it's 40 points, 50 points, what have you. I select that option and it'll actually break down the different payments, the different liabilities that they have, and if they can pay some here, pay some there, and it'll give me a probability of their credit improving and by X amount of points, which is really, really great, because we share that with all our clients, all our borrowers, prospects, with all our applicants. We share that information, and it gives them a great tool for them to move forward. If somebody gets that and they actually follow through with it, it could be as little as a few weeks.
That's good to know. So if that's one thing you've been worried about, if you've been worried about, hey, I just don't think my credit score is enough, or I don't know what to do to get my credit score up, feel free to reach out to Benny, because he can definitely break down exactly what you need to do to get that score where it needs to be to get you into a home.
Yeah.
Okay, so another question I hear a lot, especially right now because interest rates have been on the rise, is, I think interest rates are too high, I'm gonna wait till they come down and, till they get lower. What would you say to prospective clients like that who are worried about getting an interest rate that's too high and want to wait out the market?
Yeah, the first thing, and there's a couple of things I would say, especially to somebody that is very rate sensitive, or it's their primary concern, it's rate. My first question is, are you renting? And if the answer is yes, then it's a no-brainer, because the amount of money that you're paying in rent, it goes straight in the trash. There's no equity that you're gaining from renting. The one gaining the equity 100%. Is the landlord.
Exactly.
The landlord. So that's the first thing I would say. If you're concerned so much about the rate, whatever you're paying in interest is nothing compared to the amount that you're going to be paying in rent, or that you're paying in rent.
Exactly.
The next thing I would say, as far as interest rates are concerned, there's a lot of other variables when it comes to purchasing a home. So it's really not just your interest rate. You also got to take into account that you're gaining equity in your home, you're establishing wealth, you're gaining equity in your home, because the value of your home, typically, historically, values of homes increase. If you look at a graph, the trend might be kind of like this, but for the most part, it's trending upwards. So there's always equity that you're gaining in your home. That's really how you establish wealth. And refinancing is always an option. But if interest rates begin to dip again, refinancing is always an option. So you're not locked into a 30-year mortgage, and it is what it is.
At a higher rate, right? So,
Yes.
so basically, what you're saying is don't stress so much about what the interest rates are today, because the benefits of owning that home, gaining that equity, no longer paying rent, far outweigh the interest you'd be paying on a mortgage. And the fact is, even if 5-10 years down the road, we see interest rates come back down, you always have that option to refinance and lock in that lower rate. All right, guys, so just want to thank you again for joining us here. I want to thank Benny for taking time out of his day to sit down and go over these questions with us. Like I said, we get, as realtors, we get tons of questions. And when it comes to the lending side, I like to direct those questions directly to the lender, because they are the experts in that arena. And so, like I said, if you have any questions, even after this video, get connected with Benny, get connected with me, and we'll get those questions answered for you. And I just want to thank you again for letting us come here. We're here at the Gateway Mortgage office in McAllen to come chat, and thank you for having us.
For sure, man. Hey, thanks for taking the time and for having me on this video and for trusting me, man.
Of course. All right, guys, we will see you next Tuesday. Enjoy your weekend. YouTube, I hope you guys enjoyed that meeting. We had a great time sitting down with Benny. He definitely answered a lot of questions that I had, and I think a lot of you might have. But, I know there's questions that were not asked or questions you might have that we didn't talk about today. So leave a comment down below. Let us know what questions you have. This way we can answer them. And of course, if you want to get connected, you can reach out to me or Benny. Our information is down in the description below. Do me a big favor. If you could leave a like on the video, hit subscribe, and click on the little bell notification. That way you'll be notified anytime a new video hits the channel. But as always, it was great spending this Tuesday with you, YouTube. And if you guys need anything, feel free to reach out, get connected with me. If you want to start your home search or just curious, what do properties value at down here in South Texas, check out the link down below. And definitely to all my homeowners out there, see how much equity you've gained in your property. I guarantee you it'll surprise you. But like I said, there is a link down below that you can see exactly how much your home is worth. But anyways, I hope you guys have a great rest of your week, and I will see you guys next Tuesday. Take care.